It is true that we are living in a more uncertain world, so that makes it more difficult for us to forecast, to predict. But it's not then something very new, because we've been there through the COVID, for example, when we used the scenario analysis, of which you speak in the strategic review, and that served us well at that time. Then we had Russian aggression on Ukraine, where we again were faced with a large shock, which required to find another path for the forecast than the usual ones, and then the surge in the inflation, where we had problems forecasting in the beginning, but have recently got back to the position where our forecasts have proved to be accurate. If you look over the last rounds of the ECB forecasts, they were good. However, now with all the trade uncertainties, we again have resorted to some kind of the scenario analysis. What if happens this or that? Because we don't know what will happen with certainty.
Yeah, from my conversations here on the ground, what I understood is that the ECB is quite confident that the past inflation shock is out of the system. So we're talking about the shocks which we are currently looking at. So what is the sort of most dangerous one?
Well, that's true. We think that we have now basically came with the disinflation process, past inflation shocks to an end. But there are, of course, possibilities that we are faced with the new shocks in the future. You've seen how the energy prices shoot up after the beginning of the conflict between Israel and Iran. Trade is still a big uncertainty. We hope that by July 9 we will have more certainty, but it's not guaranteed. We'll still have to see how it plays out. And then in the medium run, there are things that we mentioned, like the technological revolution, whether it will produce such increases in the productivity, which will act in a disinflationary way, but also continuation of the geopolitical tensions, which lead to a more fragmented world, to the changes in the supply chains, which might be more inflationary, defense spending, which will increase in Europe. The decision has been made. That will also contribute somewhat to the inflationary pressures, and demography, of course, which is continuously changing and also has an impact on the inflation. On top of that, there is a climate change and everything with the environmental sustainability that might also have an impact on our own job and on the price prospects.
Yeah, clearly the jury is out whether it will lead to higher or lower inflation, but I guess the message is quite clear that you want to stay vigilant on both sides of the equator, so to say.
Absolutely, this is what we are saying. We will stay vigilant on both sides, and we have symmetric view of the undesirability of the deviations which are persistent or large from our medium-term target. However, we also emphasize it is a medium-term target, so we can allow oscillations around the 2% in this medium term, because, as we know, it's impossible to pin down the inflation always to exactly 2%.
Let me ask you about your experience as a small country. You're the last adopter of the euro. We're not talking about Bulgaria because they will only get it next year. So what's your experience so far?
So far, very good. We have reaped the benefits of adopting the euro that we expected. At the time when we were adopting, we got into the euro area on the 1st of January 23. What we've seen, and I think this is now a good comparison, that through this inflationary period, we saw lower cumulative inflation than the Central East European countries that are EU and have not adopted the euro, like, for example, Hungary, Poland, Czech Republic, Bulgaria, Romania. So we saw lower cumulative inflation and lower interest rates, because the risk premia when we adopted the euro immediately came down. So at the moment we have the interest rates which are lower than the average in the Eurozone, whether it's corporate loans, mortgages, cash loans in Croatia. In a way, the cost of monetary policy, the cost of disinflation was lower in Croatia having a euro than if you stayed out of the Eurozone.
But you're also depending on tourism. The cost of a higher outside value of your currency, did you feel that?
No, I mean, this is not the question of the exchange rate, really. It's the question of the inflation. And yes, inflation was present through these last 3 years, and it was particularly strong in the services sector. And mostly in the services sector connected to the tourism, which means accommodation, hotels, restaurants. And this is where we saw a larger increase in the prices than on the average. Which is to some extent a catch-up in the prices that we saw towards the competition in the Mediterranean. But I think that we have to be mindful now to keep the competitiveness of the tourism going further and not to allow the prices to increase more than they have increased so far.
If you talk to your colleagues in other Eastern European countries, do you tell them that's a good idea to adopt the euro?
I do. This is an economist's point of view. If I put everything together, it makes sense to adopt the euro. Why? Eurozone is our main trading partner. And if you're a small central bank, close to a large central bank like the ECB, you cannot fully run independent monetary policy. That's what I've seen through my career. And the benefits of getting into the Eurozone are larger than the potential costs. But of course, it's always a political decision.
Currently, it seems that Europe is like en vogue, yeah? I think it's kind of spectacular how the image has changed in the beginning of the year. Do you get a little bit from that as well, from the benefits from that?
Well, we've seen certainly flows of capital going the European way, which is partially a consequence of what has been happening on the other side of the Atlantic, unpredictability of the policies which have caused these flows. On the other hand, there has been some flows on the hopes of higher growth, higher fiscal spending, particularly German announcement of 1 trillion of the spending in the defense sector, companies, equities, etc. This has helped to keep the spreads low. You remember that the yields went up after the announcement of the fiscal program in Germany, and all in parallel went up. But then they came down and the spreads were kept low. I think that with this restructuring of the balanced portfolios of the large investors, we might see in the coming months continuation of the inflows in Europe. And that's good for Europe. I think that Europe actually should use this opportunity now to push ahead with its long-term plans, which never fully materialized, of the capital markets union or savings and investment union, and to remove the existing barriers still in the European market.
Do you think there's enough political will, just briefly, because we're coming to an end, to seize that moment? Because
I have never seen more political will in Europe than now to do that. Whether there will be enough, let's see.